Today was definitely a very interesting one. I think many of us came into the day expecting the Jackson Hole to move the market. However, I don't think, based off the last 11 weeks of trading, that we expect anybody really expected what we saw today. I know I was positioned, well, positioned mentally. I didn't have any actual open positions, but I was under the impression that we would rally all day. Even looking at last Jackson Hole, it was a pretty big rally. It wasn't a dump like this. So, but the one interesting thing that if you were watching it live, I mean, Spy and Jay Pow talking, is that before he even said a word at this 10 o'clock candle right here, it dumped. So it went from 419.96 all the way down to 415.06. So that was almost a $5 candle. But it was interesting that the algos were already dumping it before he started talking. And then it went all the way down to the bottom, and then it rocketed all the way back to the top before it came back down and closed at 14.5. So that candle had almost, let's see, 5, 10, almost $11 in movement on one candle if you factor in the up and down movement. That's something you don't see very often. And then you just have the trend. So this was, I mean, this is a textbook trend day. I will say this one was a little different at times because, you know, the thing I look for with a trend day is this 5 EMA right here, or especially the 8 EMA. I actually used to really just use the 8 EMA, but the 5 EMA is something that another trader had mentioned over time, and I've heard a lot of other people mention it, and I finally started implementing it, and it's actually been really useful. So it's something I now have on my chart, and I actually use it almost more than the 8 EMA, and I'm getting close to the point of getting rid of the 8 EMA and just following the 5 EMA for intraday trading at least. So anyways, you can see here we broke below it, and then we just kind of dumped. And then this was the rest period, the first rest period, right about here, and then we started selling off. We did have a rest right here, right before during power hour, and then we kind of kept going. So what I look for with a true trend day, and intraday I was talking about this a lot, is that if we get to about noon and we haven't broken trend, so that means you are still either under the 8 EMA or especially the 15 or the 5 EMA, then usually that's a pretty good indicator that you're going to see further downside as the day goes on. Now, it doesn't mean that trends can't break, because I have seen a big old trend like this. It's been a while. It was usually when the VIX is way higher than it is now. But I have seen these big old trend days like this. And it was this one actually here was setting up for it. And I did have it. I can show you what I was looking at right here. Set up. Oh, my things are messed up. There we go. You can get these V recoveries. And we actually started pretty convincingly doing it. If you can see this V bottom. So that was something I was watching, and actually interesting enough with this was kind of a diamond pattern. So if you put those supports there, and you put this one here, and you can see it actually forms a really nice diamond. And this is something I do look for quite often actually on these trend days. So when you think you have a V bottom, if you kind of like what do you want to call it, superimpose or predict by cloning your trend lines, and you put them around each other like this, you can make a nice diamond. And whatever way it breaks out of the diamond is usually the way it's going to go. So here, I was watching these resistance right here, and had it broken through right here, I mean, it would have broken the 8 EMA, which also would have been a good indication. But had it broken that resistance line, then I would have actually suspected upside. And I was watching for that for a long time. And I know many of us were watching for that. And I know a lot of people today actually got burnt trying to wait for the upside to come. That's the other hard thing. So not only was today a big trend day, which is hard enough to trade, but when it's a Fed day, so it's not like markets came out and said, you know what, we're going to sell off today, or you know what, we're going to rally today. That's fine. Those happen. I mean, we've been seeing those for months now. But when the Feds come and say something, it's always hard to trust, because there has been numerous times, like if you think about a couple weeks ago when Apple came out and said, hey, we're freezing people now, and markets dumped like crazy, but then it rocketed back up by end of day. And there's been other times through this 2022 bear market where we've seen that, where a Fed member or Jay Powell will come out in the morning and be like, hey guys, guess what? And markets are like, oh my gosh, and then they bottom out. But then they find support and they rocket back to even higher than they opened at. So I know a lot of people are like, well, why couldn't you trust it? Or why don't you just like trust the trend days when they're there and blah, blah, blah. But like, it's very hard to, because there's been countless times that we have seen a trend snap something, or, you know, the Fed say one thing and then they release another statement saying, just to clarify, that's not what I meant. So it's really hard to trust these trend days. Trend days, and I tell you guys this all the time, are my least favorite days to trade. And I absolutely hate trading them because they break all the technicals. You trade in basically oversold levels or overbought levels all day long. And basically what you're doing is you're buying and you're just hoping that it continues to do what you think it's going to do. You're not using technicals to enter. Yes, I did use the 1 minute chart to help find me a bounce to get in on, but you're basically just praying that it's going to continue to do the trend and that it's not going to break trend and have one of those wild recoveries. So I absolutely hate trading these days because you're just basically guessing. And you're either right or you're wrong. Because when they do recover these days, it's big recoveries. And there's no getting out of it. It'll shoot up a percent candle and you'll be done. So if you had a rough day today, don't feel bad. It's just part of the trading, you know. There's always tomorrow. There's always next week. You don't have to trade every day. If you don't like what you see or you don't believe what you see, don't trade it. Wait till the next day and trade that day. Capital preservation is the #1 goal that everybody should have right now for 2022. It shouldn't be about making money. It should be about preserving capital, because this will be the hardest market most of us probably ever trade in our whole lives. All right, here's the daily chart. Getting into the TA now. So we had a ginormous candle. So not only did we have a bearish double top, bearish engulfing candle, this candle engulfed 60% of the month's trading. So basically all the month progress and areas that we traded in this 405.3 to 419.5 level, 420 I guess, was just engulfed today. That is an unbelievably bearish thing that just happened, and something that doesn't happen very often. We had a total of $14.71 of movement today, which is 221% of the 10-day average movement. Average movement is only $6.64. This is the biggest red day that we have had since June 16th, which was a negative 3.31% day. And actually, I take that back because that was, sorry, June 13th. I pointed to the wrong day, but June 13th, which was a negative 3.8% day. And that was also a $14.80 day. So that's the type of movement we have. We haven't seen this in 2 months now, over 2 months. So this is what I'm looking at. I'm assuming our top was put in potentially on August 30th. So we're going to use that as top. You can see we have this red resistance line here. And this is a nice resistance line actually. And this is one I'm going to keep in my chart for a long time because we have 1, 2, 3, 4 points of contact. And you don't really get that type of like contact with resistance lines, so that's a big deal. So that's one I'm going to definitely keep in my chart for quite a long time until we break through that. And someday, whenever 2022, 2023, we're going to retest that resistance line as we're trying to make all-time highs. So I'll keep that on there. But what I did is I cloned it down here. I did have it off of this candle from July 14th to see if we could make a channel here. And actually before market opened today and before we dumped, I headed off these candles and it actually made a really nice bottom. But we broke through that obviously, so I'm putting it temporarily off of the low of today, which would mean that Monday when we open, if we can hold 406.5, then we could establish just a wider upward channel. And you actually kind of see this happening here with Apple, and I'll get to that later. So I'm watching that for sure. I was watching this blue downward channel based off this week's price action, and it was actually a really nice downward channel, and I was pretty convinced that it was going to hold and that we actually were going to break the upside of it and try to retest these 430s today, but we broke through that, so we're going to go ahead and finally get rid of that channel. So this really cleans our chart up here, and you can see how nice this looks, where we have a clear present direction. So I'm using today's high, August 16th high check that. I'm using the low of August 26th and the August 22nd low, and then today's high to make this downward channel. I will probably have a resistance line here eventually that I'll try to use as a channel, but for now I'm gonna just ignore it, just because until we go back up it doesn't really matter, honestly, and it's not going to help me really find support because we need to find another bounce down here until we do that. So key areas to watch for next week, and I mentioned playing level to level. So if we're playing level to level, we broke through 417.5, so we should have assumed that we were going to go to 405.3. Of course, we're not assuming that we're making these levels every single day, as that would be very unlikely. This is obviously an abnormal day, but we should assume over the next like 7 to 14 days we should break through. So we closed right at support. I mean, on top of it, 405.3. Couldn't get any closer to it. So from here, two scenarios. One, we double bottom at 405.2, 405.3 on Monday, and we go back up. Most likely what I think is going to happen Monday is we're going to have what's called an inside day. So our range is going to stay inside of this candle. And then from there, we will continue downward. We kind of saw that happen here, where we had a range day and then we bounced up. So that is most likely what's going to happen. However, if we break through and close on Monday below 405.3, then it would be pretty safe to assume that by September 20th, which that would be a very slow burn down, we should see 392, 391, 390. However, I obviously suspect we would see it much quicker than that, probably within 7 to 14 days. So if we close Monday below 405.3, it would be pretty safe to take puts down there. Now, something to take into consideration here, you can see that using this nice red line here and this black line that's starting here, we could be putting in the carrot top, which I was kind of working on that earlier this week, but obviously that all got broken when this candle popped through. So these bear market rallies and then the sell-offs have been, as I mentioned earlier in the week, 15 days long and 13.3% drops. So that would put us at September 6th and a potential bottom of 374.3, which is right about here, which gives us the gap fill, and that brings us right into CPI. CPI is on September 13th, and then FOMOC is on September 20th. So there's kind of two ways that I think things could go. One is we just start a sell-off, and we just start dumping, and it's a pretty aggressive dump into CPI, right, or into this 13-day sell-off, and we do hit anywhere from 375 probably to 390. I don't really know where we're going to end up. Most likely we would probably go for this gap fill. And then we're just going to kind of chop. You can see down here, like even the June, when we hit the bottom, we had a really big rally, and then we just kind of chopped. And then we took a direction. Most of our dumps have been like that. We dump, and then we kind of chop, and then we make a direction, then we do something else. So most likely what's going to happen is scenario one, we have a big sell-off, we hit our low in the 370s, and then we're probably just going to consolidate. And then what's going to happen is either one, CPI is going to come in good, which says things are better than we thought they were, and inflation actually is under control. Right now, previous CPI was 8.5%, which was below the 9.1 forecast. There is not a forecast for CPI yet, but I'm watching every day to see when they update that. CPI is good, then it can be assumed at the next FOMOC meeting that we should get a 50 basis point hike, maybe 75 if they just want to stick with the getting inflation down quicker. Either way, market will be okay with that. If those two things happen, then we're going to be going on a path back up here. to 420s. However, if we have our sell-off, we consolidate and we get CPI right here on September 13th, and CPI is bad, so it's over 8.5% and over forecast, then we're going to probably keep dumping, and then FOMOC happens right here on September 21st, and if they come in with a 75 basis point hike or 100 basis point hike because they think inflation is still out of control, then that's when things are going to get real bloody, and we could be on a path down here to low 330s. I personally do not think we are going to break below 362, 360 this year again. I think we will kind of trend down. I think we'll come down in somewhere in this green area, and we're going to consolidate and bounce, is my expectation. So key level though, this 405.3 for SPY daily. Now looking at the SPY weekly, interestingly enough, we're still in this 11-week bull channel on the daily, or the weekly I mean. We have not broken out of that. However, in order to hold that level, we have to open at about 410, which is about a 1% day. So it's not impossible. I've seen crazier things happen on a Monday. We opened down 1%, I think it was. So it could happen, but it's unlikely. So most likely, once this breaks and we confirm break, that's when you can kind of play this next level down. 390 really is the next big level. So if you're playing anything long put-wise, you should be looking to close out around 390 and reevaluate. However, if we don't break through this daily 100 EMA, which is 404.3, we could be looking for a bounce there too. This weekly 100 right here would be a big deal to get through, but we really don't have a lot of support in between here. So if we continue the sell-off, I would look for next week right here, about 390. You can see this recovery support line right here is actually for next week right at 386.52, so we could be watching for that level. Upside level though, we're going to need to keep an eye on this 412.3 to really 415.3. This is what I was talking about, that weekly level. There's just not a lot of level, and this weekly candle didn't really give me any more information. I'm not sure if I want to move it back up to 415.3, based off of kind of this level right here, which does line up with the daily level, so I probably will move it back up there, but I haven't really decided what I want to do there yet. Looking at futures, so futures always, gives us a little bit more idea. So same thing, I was watching that blue bull channel, we broke through that. I'm going to leave this, is that resistance line I was talking about on SPY that I was already projecting for the V-top. I'm going to leave that on there for now and just see, and maybe we'll go double bear channels here just to see what happens next week. So you can see actually futures really is in a really nice upward channel, and theirs looks more believable that we open on Sunday night and we kind of actually bounce here. I was hoping it would be a little bit more better of a line kind of right here using this red line, but obviously that didn't happen. This would have made it more convincing of a channel, but support wise, you can see we bounced really nicely off 40, 42, 40, 43. So that is going to be an important support level to watch on Sunday night and Monday. But for the red bull channel, if it even is a bull channel, it's 40, 55 to keep an eye on. And from there, support wise is this 40.16 right here to keep an eye on if we're projecting down in this black downward channel for a potential bounce. The one interesting thing I forgot to say on SPY is we actually closed back below all of the EMAs, the 8, 20, 50, 100, and 200 EMA for the first time since July, and that's when we were at the lows. So that's actually kind of interesting that did happen. That is pretty bearish actually to be below all those and close below them, so it does favor more of a downside case actually. Looking at the futures weekly chart, same thing. We are still in the 11-week bull channel right here. Futures would need to open at 40.96, 40.90 to 40.95 to be able to hold, which obviously that would be a pretty a pretty green open, about a 0.5 to 1% green open, it's pretty unlikely that that happens. So most likely we're going to break through here. However, you see that futures did bounce off that weekly 100 EMA. So this 40-50 level is actually going to be a big support to watch on Sunday night and Monday. Weekly level right here to keep an eye on upside wise is 40.11, 40.12, 41.12 to if we're going to start going back up here. We did, technically gap fill, but we left about 30 cents off the top on the SPY weekly and the SPY daily, but it's pretty much considered a gap fill with 30 cents and being in the upside. I'm not as worried about it as when it was like $1 or $2. So, but once we break through here, same thing. I'm going to be looking for 39.04. Anybody going short, that should be about your take profit target. 3,900, 39.04. Just to be safe, and then from there, if we break below that level, you can think about running down to the weekly 200 EMA at 36.76. That's another reason I really don't think we're going to go back below all-time low or lows, 52-week low right now, is because the weekly 200 EMA is right here, and it's going to be coming up with us, and I don't really think we're going to break through the weekly 200 EMA. We had such a crazy hard bounce off of it that I just don't really think it. And you can see we have this orange trend line. This actually goes back to COVID recovery, and that was what I was using, and that's where we've been trending off of. So I don't think we're going to break through that. It's possible, but I would be pretty surprised to see us actually break through that level. So looking at Apple, same thing here. I was mentioning, so we're going to get rid of this resistance line here. So this is a really nice top right here. So they actually have a much better bull channel. So you can see here we have support right here. It touched on June 8th, August 17th, or resistance, I'm sorry. And then we have support down here. We have June 16th and June 30th. So I'm going to get rid of volume here. It's in the way. This is really nice. I was mentioning that Apple has been really lagging behind the SPY moves, not only in intensity, but just in the actual making a move. Even like earlier in the week when SPY really dumped pretty good, and I mean, it broke uptrend, no doubt about it. Apple really didn't break uptrend. I mean, up until this morning, it was still in a really nice upward bull channel. So some things to keep in mind is that Apple could come down here next week. I mean, this is Friday, I believe, September 1st. The 2nd is Friday. So right here, we could come down to this 158 level and bounce, and that could take Apple or SPY and the markets back up with it. Even like Tuesday or Wednesday, we could come down here. We could gap fill on Wednesday. I think that's Wednesday, right? Yeah, Wednesday. We could gap fill right here on Wednesday at 157.3, and then we could bounce and we could go back up. So those are things that we got to be careful about. I know a lot of people were like, we're going back to 360. Let's go long on puts. Let's go long on puts, But I think there's a really big case to be made to be cautious. The last thing you want to do is 1, be early, and 2, obviously be wrong. And I'm not somebody that really likes swinging trades anymore. Obviously, I tried swinging some calls this week for the gap fill that happened today. And I still had to sell them at a loss because it looked like we were convinced we were going to be in a big sell-off. So I'm not a big fan of personally going long on positions. I'd much rather trade level to level intraday and call it out for you guys and let you guys decide what you want to do. But main things to watch is this resistance line here. There's really not a good way to like project it. So like I did on SPY here. I mean, I could project it off of the bottom from today, but get a little higher up, I guess, right about there. So we could see a Monday bounce right around this 163.2 level and stay in this downward channel, and then we could maybe go back up before we come down. But there's really not a good channel going on right here. The best channel is really this red one to really keep an eye on. So key levels, we gap filled here and we gap filled there this morning. So we actually covered 2 gaps in one day, which is pretty cool because this one wasn't completely filled yet, and obviously that one was left. So there's about like, I think, let's see, low is 31. There's about 25 cents left on that, 26 cents left on that, but that's pretty much gap filled right there. So next gap is right here at 157.64. Keep an eye on that level. A 200 EMA is going to be coming in here too on Wednesday, so that could be a really good bounce area for Apple to keep an eye on, is that 157 level. So looking at the weekly in Apple, the weekly actually looks a lot more convincingly bearish to me, in my opinion. You can see we're still in this same bull channel, which if you look at it, we kind of entered it here. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we've really spent 14, 15 if you count this week, in the same channel, just in the same trending up really. Even when we were trending down, we were technically trending up. But we basically gap filled. I mean, the hanging gravestone doji played out perfectly for the drop. Again, I did expect us to test 172.2 first this week. I didn't expect that big Monday red open, but how it goes sometimes. So the most important thing to watch for is resistance at 166.4. If we happen to break through that level, then we're probably going to go back up here and do an actual full gap fill and then retest 172.2. But most likely we're going to come in next week right here and test this 161 level. From there, I think Apple has a really good case to be made to play level to level, almost better than SPY, to be honest. Give yourself like 14 days probably on it, but if you want to play it, and I'm actually going to be considering it myself once we break through 161, playing these level to level. Once we break 161, we got 157.4 right here, and then we have for next week perfect support bounce at 154, which that puts us about down here end of week. So it breaks the bull channel though, but on the weekly, it's a really big channel or a really big support line. So looking at the VIX had a monster day today, crazy day, like about 17.3% day. One of the biggest days that the VIX has had since June 13th, which that was the day after CPI. So that was another catalyst type day, but crazy big day. So big things to take away from the VIX here. We broke the downward channel, which that's huge. We've been waiting to break this channel, and I said once this channel breaks, it's going to be time. It's probably going to start selling off on the markets. We attempted to gap fill yesterday. We still did not complete the gap fill, so we still have about 40-ish cents right here. I suspect it probably will be left, and that'll be okay. But the interesting thing is we actually closed above 25.5, which puts us back in this 25.5 to 34.7 level, which if you look back, and this is all of 2022 right here. Let me open it for you. There you go. You can see most of our time has been spent in here. We had a brief period. We went up. We kind of spent some time down here in February, then we went back up. And this is the March sell-off. So we came back down here. And actually, interesting enough looking at this, this was the March top right here. And you can see we kind of went up, kind of just like today. And then we dropped back down. And then we finally rocketed up. So that's actually something that could happen looking at the VIX now. I didn't see this until just now. We could see a pretty big bounce off 25.5, and then we could see the market sell up, kind of come back down and settle, and then we go back up, which to me would mean SPY. So that all happened back here in April. Let's see here. So that would have been right here. So you would see we had this top put in on March 29th, and then we sell off, and then we bounce, and then we really sell off before we bounce, and then really sell off. So that's something to keep in mind that could happen next week too. But as long as we're trading, I would really like to see us close a little higher to say we're back in this range. But if we're trading 25.5 to 34.7, then there's going to be some downside coming to the market for sure. However, come Monday, if we come back down into this green zone and close back in the green zone, then I do suspect that market's going to have some upside coming. Looking at Bitcoin, so Bitcoin is still in an upward channel. However, if you look at it, we are actually at a potential bounce zone. So I mentioned earlier in this week, if Bitcoin loses 20.8K, that I suspect we're going to see a sell-off, and sell-off we did. Now we're right here at this key 20.2 level. If we were to break, and I'll zoom in so you can see a little better here. If we were to break through tonight, tomorrow, I guess technically too, because this is the new daily candle at 20.1. So if we were to see 20K, I'd say to call it safe. we would be breaking this upward channel. However, if they put in support right here, which they're really trying to right now at 20.2K, and they can hold that all weekend long. Monday is the 29th, so here's Monday. If they can hold 20.2 all weekend long, we actually could see a bounce and a retest to 20.8. And if Bitcoin holds its levels all weekend long, I'm going to be keeping a really close eye on it. We actually could see some upside come next week. So I feel like I'm really bullish right now. I don't want to be bullish right now because obviously I just spent 11 weeks not understanding why we're going up. But I think I almost finally just understood more why we are going up. And I'm understanding more that the markets need a reason to sell off. I've been wondering for the last 11 weeks why we're not selling off. Why are we not dumping? Why is markets rallying off this news? Why are they doing this? Why is PCE not mattering? Why is CPI not mattering? Why is FOMOC not mattering? The reason is that markets naturally go up. So people need somewhere to put their money. Institutions need somewhere to put their money. Retirement funds. Everybody needs somewhere to put their money, and that's the stock market. Bonds too, obviously, but the stock market. These low volumes that we've been having, and I'll turn volume back on here for you. You can see we've been having these low volumes since pretty much they started pretty much at the June low. They've had a couple peaks every now and then, but especially from pretty much August until now, we've had some of the lowest volume all year long. And it's a little better, you can see it there. You see all this the volume has just been trickling off. So there's not been a reason to sell. Today, Jay Powell didn't say anything new. All he told us was the exact same things. Some people think he said it in a more hawkish way. I don't really think he did personally. I think he said the exact same thing. But this time, the markets listened. So the question remains now, come Monday, do they still have a reason to sell off? Markets have known about inflation being bad. They know that inflation hasn't technically peaked. It got better, but it's probably not peaked. Markets know that we're already in a recession because of GDP. They already know that guidance is going to be bad for earnings because everybody has been adjusting them and people have been missing left and right now. What is there out there that is going to continue this sell-off? That is the question I'm asking myself right now. I don't know what the next catalyst is. There really isn't one. And some people will say, well, markets don't need a reason to sell off because they're just going to sell off because of what's to come, or they're forward-looking. Yes, they're forward-looking. We're already in the recession. We're already in the inflation. We're already in the FOMOC minutes and the hikes and stuff like that. Yes, this 11-week rally right here was based off of essentially the idea that the Fed was going to pivot. So that could be the sell-off reason, now that Jay Powell was very clear that he is not going to pivot this year or next year pretty much. So that could be the reason we sell off, but I still trade under the sense that markets need a reason to sell off. Now, come Monday, if we just continue a sell-off kind of like we saw here in June, or kind of like here in April, or here in April, or like here in January, or here in February, then okay, I'm on board that we're gonna see some dumps, or we're gonna see a dump. But we could see a day like here where we just kind of close slightly and then go back up. So I want to see what Monday does. Monday will be a big tell sign. If Monday comes out heavy hit swinging and we are super bullish and we end up back in this range, then in my opinion, market just overreacted and they're going to continue to go back up until CPI or something even worse happens. If we do continue to break under 405.3 and we have another big red day like a 1 to 2%, or especially over 2%, then I think markets are finally like, you know what, we were wrong. We need to sell off now. And that's what we're going to see. So, hope you guys enjoyed this video. I'll see you guys on Monday. Have a great weekend. Thank you for tuning into this video. If you like the video, go ahead and like and follow me just to support the page. I provided my Discord link here. This is the lifetime link, so sometimes there's issues with this. If you have any issues, just go ahead and send me a message and I'll get you a temporary link that'll work. Some benefits of the Discord is I do a pre-market update with some key support and resistance levels to watch. Throughout the day, I'm on there doing live commentary on SPY and the general market with updates about key levels that are broken. I also do live trade alerts. Currently, it's $20 per month or $228 for the year. If you want to follow me, I'm on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh. Thank you.